How's it going, everybody? Matt Diamond with Kalshi, and we're back at it with another strategy video. Today, we're going to talk about how to trade bull flag patterns on the S&P 500 and the NASDAQ 100 daily brackets. Bull flag patterns are one of the most popular technical patterns that a lot of traders like to use, so I think that it's going to be a great video. But first, let's talk about what a bull flag is. A bull flag is a formation found in stocks with strong uptrends and are considered good continuation patterns. They are called bull flags because the pattern resembles a flag on a pole. The pole is the result of a vertical rise in a stock, and the flag results from a period of consolidation. The flag can be a horizontal rectangle, but is also often angled down away from the prevailing trend. Another variant is called a bullish pennant, in which the consolidation takes the form of a symmetrical triangle. And up until recently, 2023 has been a pretty strong year. The market in general has been trending higher. So there's some really good examples on the S&P 500 and the NASDAQ 100, and we're going to go over those today. And trying to identify a bull flag can be complicated, but I'm going to try to keep it as simple as I possibly can. There are a lot that you can look at and say that there are bull flags. I'm just going to go over some of the ones that I think are the most obvious. And the first one here is going to be in this area. So as you can see, we had a very strong bullish move to the upside. And then what happened? We had some sideways consolidation, even a slight pullback. So essentially the pull and then a little bit of a pullback forming the flag. And then what do you know? A break out of that flag for bull flag continuation. And the level in which that broke out of the flag is right around 4,300. So we're going to use that level to go into the back end of Kalshi and trade some of those event contracts. So now to structure the trade on the back end of Kalshi, we would go into the S&P 500 daily bracket. And remember that level that I said was 4,300. So we'd want to look at that 4,300 to 4,350 or even 4,350 to 4,375. We don't want to go too far out. And then what we would do is if we think there is going to be a bullish continuation, we would want to trade the yes shares on those upper ranges. So that was the first example. Let's go over another one. And this is going to be really good examples because it shows that bull flags, they're all going to look slightly different, but the concept is the same. So here's another one that I see. A very nice strong move higher, essentially the pull. And then it did have a pullback, a little bit of a deep pullback, but the concept is still the same. So you have the pull, and then you have a pullback, creating that flag. And then what happens? Right around that 4,400 level, it ends up breaking out of that flag pattern and has bullish continuation to the upside. So now to structure the trade on the back end of Kalshi, S&P 500 daily bracket. And remember, I said that 4,400 level. So what we're going to want to look at is the 4,400 to the 4,425 range and the 4,425 to the 4,450. We don't want to go too far above. We want to keep it relatively close because we think it's going to close in those ranges that aren't too far away. And then we're going to want to trade the yes shares on those upper ranges. And now let's go over another example on the S&P 500 daily. So the same concept. It may look slightly different, but the example is going to be very similar. You had a big, strong bullish move to the upside, essentially forming the pull. And then you had a pullback, kind of stays in this consolidation range, the pull and then forming the flag. And then right around that 4,450 ends up breaking out of the bull flag and has a nice bullish move to the upside. Now to structure the trade on the back end of Kalshi, going into the S&P 500 daily brackets, remember the level that I said, 4,450. So we'd want to look at the range 4,450 to 4,475, 4,475 to 4,500. We don't want to go too far above, and we would trade the yes shares in these upper ranges if we believe that there's going to be continuation out of that bull flag pattern. So that was the S&P 500 daily chart. Now let's go look at some bull flag patterns on the NASDAQ 100. And you could try to identify every little thing as being a bull flag, but I'm just going to highlight a few. Concept is still going to be the same. So here's one that I see. You had a nice bullish move to the upside, forming the pull. And then what happened? A little bit of a pullback, consolidated a bit, and then right around that 13,800 level, ended up breaking out of the bull flag pattern and had nice continuation to the upside. So now let's structure the trade on the back end of Kalshi going into the NASDAQ 100 daily bracket. These numbers are going to be slightly off because that bull flag happened a while ago. But remember the level that I said was that 13,800. So let's just assume that this is 13,800. So the levels that we would want to trade around or structure some trades at would be 13,800 to 13,900 or even the one above 13,900 to right around that 14,000. And if we believe there is going to be bullish continuation out of that flag pattern, then we would want to trade the yes shares in these upper ranges. And now to go over another example, bull flag happened pretty quick after that prior one. So we had the breakout of the bull flag that I explained before. And then what do you know? A strong bullish move to the upside, creating the pull, a very quick pullback, nice consolidation, forming the flag. And then right around that 14,400 level, we broke out of that bull flag and we did have some continuation to the upside. And now to structure the trade on the back end of Kalshi going into the NASDAQ 100, remember that level that I said, 14,400? So we would want to focus right at that level or right at that range, maybe a little bit out, but we don't want to go too far above. And then we would trade the yes shares to the upside if we're expecting a bullish move out of that flag pattern. And now to go over one more example on the NASDAQ 100. So this one's going to look slightly different, but the concept is going to be the same. So we had a very strong move higher, creating the pull. And then we had a pull back, a period of consolidation, forming the flag pattern right around that 15,000 level. And then when it broke out of that flag pattern, we had bullish continuation to the upside. And now to structure the trade on the back end of Kalshi, going to the NASDAQ 100 daily brackets. And remember that level that I said at 15,000. So we'd want to look at the 15,000 to the 15,099, or just one above, 15,100 to 15,200, and we would want to trade the yes shares in those upper ranges if we're expecting bullish continuation. So those are some great examples on how to trade bull flags on the S&P 500 and the NASDAQ 100 daily chart using event contracts on Kalshi. That's it for the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.